Control Markets Weekly. It is our weekly show wherein we get you the wrap up of all the action that has taken place on D Street during the week gone by, and also discuss with our guest week after week what are the important cues and themes to watch out for. Joining me today is my colleague from Money Control Pro, Neha Dave. Thank you so much, Neha, for chatting with us today on the show. Neha, hi. If you can hear me, I'd like to start with your view on how the markets transpired this week, especially with the focus on broader markets, how the whole theme played out before and after the BSE circular was issued. Can you talk a bit more about that?
Yes, surely. So it was a very eventful week for markets. Equity markets continued scaling new highs. Nifty closed about a record high level of around 16,500. However, we have seen a lot of volatility during the week, especially at the beginning of the week, and we saw some panic selling in mid cap and small cap stocks, and this was triggered by BSE introducing new rules related to surveillance. However, the clarification came from the exchange couple of days later, and there was a smart rebound in mid and small cap stocks. Now, if we see that on a longer time frame, like in August itself, we had seen that mid and small cap stocks were under pressure, and this was even before a BSE circular. So, what could be the reason for that? One of the reason is the massive outperformance by mid cap and small cap index over the last 1 year. If we look at the trailing 1 year returns, that is in the last 12 months ending July end, we saw that Nifty Midcap 100 index has surged by over 80%, and during the same time frame, Nifty index increased by around 42%. Now that is a huge outperformance of midcap index over the broader index. If we look at another time frame, say year to date, Nifty is up by 18%, mid cap index is up by 20%, but the small cap index is up by more than 40%. Now, for investors who want to look at a longer time frame, say 5 years period, in the 5 years period also we have seen that mid cap index has outperformed Nifty, though the margin of outperformance is very small, say around 5 to 6%. Now, following such a huge rally, the valuations of mid cap index is almost at par with that of Nifty, and such huge outperformance called for some healthy correction, and some profit booking was is but natural.
Can you tell us about a bit more about how the benchmark indices continued to scale newer highs, but at the same time, broader markets, once they started the downfall, they did continue to be quite volatile and quite shaky. So, do you expect that trend to continue for some more time?
Yeah, see, the overall market momentum continues to be very strong. This is supported by improving fundamentals. However, we will continue to see bouts of volatility. And as I mentioned earlier, this is primarily because of the huge outperformance by mid and small cap index and mid cap stocks. Now, if any such volatility or should I say a healthy correction should be used by investors as an opportunity to scout for stocks which are fundamentally very strong. And if I go further and deep dive into the factors that has supported markets at this level, and Nifty has scaled new highs. Obviously, there are fundamentals which are very strong, but the technical factors have also been very favorable. Now, by technical factors, we refer to flows. The foreign flows, that is FII flows, as well as domestic flows. So if one has to study the pattern of flows, the FII flows has been very mixed this calendar year. For instance, in July, we saw that there was FII outflows in the markets. However, domestic flows was very positive and strong in the month of July. Mutual funds in India saw a record high level of net equity inflows of around 20,000 crores in the month of July. This was almost 4 to 5 times higher as compared to the flows in the previous month. Now, this fine balancing between the domestic flows and foreign flows has supported the market levels. So if I talk about, if I give more example and talk about, say 2020, last year, that is in 2020, domestic flows had completely dried up, and mutual funds, in fact, were facing a lot of redemption pressure. At that time, FIIs were very active. The entire cycle of the steep fall in the equity markets following the outbreak of the pandemic and the fastest recovery was all driven by the foreign flows. So, one big positive for the equity markets is that the domestic flows have made a comeback, and they are in a positive zone since last 5 months in this financial year.
Neha, you said,
Another,
yeah, please go
sorry.
on. Go on.
So another thing on the flow side, which is another big positive development, but is often overlooked, is that the foreign flows has been very strong in this calendar year, and especially for the private companies and the startups. And this is a big story. We often tend to look only in the secondary market, what are the FII flows, but the privately listed companies, unlisted companies and startups have received a huge inflows. If I have to talk in terms of numbers, in this calendar year till July end, foreign flows amounting to around 20 billion US dollars has flown into startups and private companies. Now, this is a huge amount. And this would translate into positives for both demand on the demand side and the consumption side, as well as growth. And if this momentum is sustained, we might see that we close the year with around 40 billion US dollar kind of flows in the startups. Now, this is something. If I have to put in INR terms, it will be equivalent to around 3 lakh crore, which is almost 2% of our GDP. And it will be very positive for the overall growth of the economy, because these companies who are getting these funds will be utilizing that towards recruiting more people, improving their brand image, acquiring new customers,
Yeah.
and there will be a lot of spending on the ground. So this will bode very well for the equity markets as well.
Right. Just at the start of the conversation, you were talking about how this is a good time for select stock picking. Can you nudge our viewers in the right direction? Where do you think, one could find potential value or good returns come by over the next few months? Which sectors or which themes should they track or follow?
Yes. So, if we have to answer that question, we have to go a little bit back in the history. We have to see what has driven the market so far. So, Nifty's outperformance. I mean, the Nifty's performance has been mainly driven by cyclicals. And within cyclicals also, it is commodity companies. So if we talk about only the index, it is Tata Steel, JSW or Hindalco that has driven the index up. I mean, huge returns in the last 1 year. Also, there is public sector bank like SBI, which has performed very well. But if we see, there is a whole lot of stocks which has relatively underperformed within Nifty. And these are, like, if you take the FMCG basket, likes of ITC, Nestle, Britannia, HUL, and relatively defensive plays on the banking side, on the private banking side, that is Kotak Bank and HDFC Bank, both have relatively underperformed. So if we see the market level sustaining at this level and also railing further, it has to be a
Hmm.
broad-based recovery. And we think that the financials, especially the private banks and also auto stocks, have to participate to some extent. So, in terms of stock ideas or stock picks, IT, obviously, we all know that has done very well. But in financials, as I said, there has been some underperformance. So, HDFC Bank, for example, has underperformed, and there has been stock specific reasons for the same, that should do well. But our overall suggestion would continue to be, SBI. Despite the huge rally, the stock is still at a very attractive valuation and will be the biggest beneficiary of revival of capex cycle. So, the private banks actually has to participate in the rally and to take the Nifty higher. So this could be some of the good picks for the coming days. HDFC Bank, ICICI Bank, and SBI.
What are some more large caps? I just want to bring to the forefront the likes of a Reliance Industry, HCL Technologies, Tech Mahindra, Airtel. They've done really well in the week gone by. And, like we've already established, it was the large cap names that were really pulling the markets higher. So, what about the valuations? Are you comfortable with the way many of these large caps are trading and the way they are at the current juncture?
So if we look at the valuation, we have to see it in line with the earnings. And if we look at the earnings season, how it has panned out, so especially the Q1 earnings, Q1 FY22 earnings was, I would say that it was more in line with expectations, despite the second wave in the economy. The demand destruction or the damage done by the second wave was very much limited, as we saw in the earnings. So IT sector earnings continued to do well, and so for many other companies. But if we see at the financial sector, uh, there was a certain on the asset quality side, there was certain disappointment because it weakened during the quarter, and perhaps that is the reason why the stocks have not done well, or the valuation is still in the comfort zone. Perhaps market is waiting for a more clearer picture on the asset quality side. But we think that there is not much to worry about it, primarily because the commentary from the management has been very encouraging. Most management have indicated that the asset quality side, the performance was impacted because of the second wave. The recovery efforts were hampered because the courts were not operational, and we could see some high recoveries in the coming months. So basically, if I have to talk about stock specific, ICICI Bank saw some higher slippages, SBI saw higher slippages, but both these banks were very confident that they will recover these amounts. In fact, SBI went ahead and mentioned that in the month of July, they have already recovered one third of the amount that slipped into NPAs in the first quarter. So overall, personally, I think that the valuation still in the comfort zone for SBI, for some of these private banks, and as the earnings improve over the coming quarters, we can see some re-rating happening.
So those who want to play the earnings theme for the next quarter, they should definitely look at these large lenders. Are you saying that?
Yes, absolutely.
Okay. Any other sub-segments within the BFSI space that you find attractive, whether it's HFCs or insurance, perhaps?
Okay, yeah, it's very interesting. So, as I mentioned, that Q1 FY22 earnings was almost in line with expectations, and there was no reason for disappointment. However, there were certain pockets where we saw some stress, and insurance was one of them. Just to put things in perspective, life insurance companies, during the quarter, their profitability was dented significantly because of the second wave. There was a significant increase in the mortality claims, or what we call as death claims, and this impacted them. So they had to go for higher provisioning, and this impacted their profitability. The same was the case with even general insurance, where the health claims, medic claims had increased significantly, and their performance was impacted. So Q1 was subdued for both life as well as general insurance. And if we talk about the three listed life insurance companies, all of them, the large ones, and which are also the parts, a couple of them which are also the part of Nifty index, like HDFC Life and SBI Life, the overall performance was good, but they were impacted because of the higher death claims. And this death claims were seen by these companies in Q1, where almost has surpassed the level which they saw it for the entire last year. So you can imagine the kind of the severity of the second wave, and how it has impacted them. So this will continue for them for second quarter also. We might see a subdued quarter for insurance companies in the next quarter also, because often the claims continue for a longer period of time. There is always a delay in claiming the insurance amount. So, but however, having said that, despite the subdued performance, the insurance is a structural growth story, and for a long-term investor, it gives a good opportunity to accumulate these stocks, because there might be 1 or 2 quarters which are impacted by mortality claims, but overall, this company's fundamentals are on an improving trajectory, and this we have seen in terms of the growth in the premium income, the way the share of protection business is, the way it is increasing, the margins are improving, expenses are getting under control, and most importantly, as I mentioned, insurance is not a quarter on quarter story, but it is a very long term secular growth story, and hence investors should look out for this correction opportunity if any, or any weakness in the price to accumulate the stock.
We often talk about the rise of the retail investor, especially during the lockdown. We've seen a tremendous amount of retail participation. But let's talk about the benefit that is seen at the broker's end. How do you feel about these brokerage companies, the listed ones? Are they a good way to bet on this upcoming trend of the retail investors and heightened market participation?
Yeah, so as you mentioned, that retail investors' participation in the market has increased manyfold after the pandemic, and the trend continues till date. So a lot of people believe, and as we know that the broking industry is cyclical, so a lot of people believe that this might not continue, not this might not sustain for a longer period of time. However, there could be some businesses which might do well in the current scenario. So this broking business has done phenomenally well. As we know, a lot of listed players have done very well. In the last 1 year, their earnings have almost doubled. The ROEs have expanded significantly. But if I have to pick up one name, that would be probably be ICICI Securities, because their income stream is much less volatile as compared to any other broker, because they are into many businesses. Which has benefited after the pandemic. Just to give an example, so they are one of the leading brokers. They are also one of the largest distributor of mutual funds on the private side. If you exclude the banks, so. Uh, and also they are present into investment banking business. Now investment banking business is doing well because of the new IPOs and a lot of QIPs, and the mutual fund distribution business will also pick up because we have seen a good demand on the mutual fund side. There are a lot of NFOs, that is new fund offerings, that is happening. So ICICI Securities should do very well in the coming few months, and we could see earnings upgrade. And most importantly is, despite doing so well and delivering high returns, the company is still trading at a very comfortable valuations of around 16, 17 times FY23 estimated earnings now. And this is still lesser as compared to some of the other listed brokers. See, the primary concern with the broking business is the competition from the discount brokers, and a lot of people think that ICICI Securities will lose market share, which they have already. Some market share they've already lost to discount brokers, but we would say that it would not completely be out of business, or it would not lose more market share. It would be able to sustain, because they are also doing a lot of right things on the digital space, and they have also reduced the brokerage in the recent time.
Neha, what would you like to advise to retail investors who are just starting out in the market when the stocks, the valuations have run up so much? How should they plan their investment strategies for somebody who is just sort of fresh in the markets?
So for somebody who's just fresh into the markets, it would be better to stick with the larger names, larger liquid names, and within that space also, there are certain stocks where the valuations are comfortable, and the investors should start in a very staggered manner. So may say for example, going for some investment right now, and if they see some correction, a big correction coming for whatever macro reasons in the coming months, that could be an that could be an opportunity again to put in some more amount. So it has to be in a staggered fashion, and investors need to be extremely careful and cautious while investing in the small and mid cap names.
Yeah.
So though there might be there might be a very interesting story that is playing out, but if somebody is new into the market, it is always better to stick to the liquid and the larger names.
So if you had, say, 1 lakh rupees, which you were asked to sort of spread out across different names and sectors, how would you design your portfolio with that amount?
This is a slightly tricky question because the investment depends upon each person's or investor's risk appetite, and it differs from person to person. So for a conservative investor like me, typically 50% would go to mutual funds. That's the
Hmm.
best way to invest into equity markets, and the rest of it could be in direct equity. But again, as I mentioned, it could be in some of the index stocks and the sectors which has relatively underperformed in last 1 year. And I'll be very cautious with some of the commodity names, though they have run up big time in the last 1 year. So that is how I would go about it. Yeah.
All right. The festive season is just around the corner. In just a couple of weeks, we'll, start seeing promotions and major scaling up of different offerings and services by various consumer-facing companies. How do you see the festive season play out this time? Of course, last year was an exception. This time also things are just sort of opening up. Do you think this time one should go for a festive driven trade?
See, again, this is slightly tricky because everything depends on whether the current level of the COVID cases remain contained, and assuming that there is no third wave, obviously there will be a good demand recovery for during the festival season. However, if the number of infection rises from this level, and if the pace of vaccination somehow loses steam, then it would be difficult to say, and there could be a subdued festive season also. So investors need to play out really in a very well balanced way. It may not be that in the next quarter itself we might see the full recovery. So the lot of management have already guided that the second half of the current fiscal looks good, and this is assuming that the pace of vaccination gathers steam in the coming months, and by December we see a lot of huge population getting vaccinated. So the second half is something that a lot of management has pointed out it will be better. So not sure on whether if investors should play on the for the festive trade, and if at all, if investors need to look at some of the consumer discretionary names which are beaten down, they need to be a little more cautious and have a long term view for the recovery.
What about the overall markets and the way they've, sort of run up this week? Just for a brief moment, everybody was sort of panicking and thinking that probably this is that long impending correction which everybody was anticipating for a long, long time. But then the markets clearly shirked that off and did sort of surpass historic levels once again. But do you foresee any meaningful correction to come by anytime soon? Do you think it is long overdue?
So as I said that the markets overall, the momentum continues to be strong. There could be bouts of volatility, and as and when we get certain macro indicators which are not favorable, that may cause certain correction, but that could be brief, because as of now, as we look at the macro indicator also, most of the high frequency data indicators are showing a positive trend, be it the toll collections or electricity generation, cement production or steel consumption, import of capital goods. All of this is pointing in the month of July. All of this has seen an improvement. Now, if this improvement sustains, the market level will be sustained. But if there is certain macro indicators where there is, uh, where there is a slower pace of recovery, there could be some volatility and we might see some correction.
All right, all right. On that note, Neha, thank you so much for joining us and for sharing your views on the market and the various sectors that one should definitely keep on their watch list in weeks and months to come. Thank you.
Thank you so much.